Yes, related party transactions and balances. Related party transactions and balances. Now, the first question that we answer here is, who is a related party? Who is a related party? Then we assess what's the concern. What's the concern of the auditor? What's the concern of the auditor when it comes to related party? So a related party, in most cases, you find people saying that we are related. And especially when someone has succeeded in something. Yes, somebody has run a marathon and they are number one, you'll find so many relatives coming up. Yes, becoming number one countrywide in a national exam, then so many relatives will come up that we are related to this person. I'm their auntie, I'm their uncle, I'm their grandma, and so on. That's the related party we are talking of. Someone who has got family relations, that's a related party. Plus, number two, we'll be writing and saying that the components of a group structure, where you could be having the holding company, you could be having the subsidiary company, the element of subsidiary company, the element of associate, the element of joint venture. Other instances will even have investments. All these are related parties. So when they are transacting with each other, we refer to that as a related party transaction. You know this from group accounts, that at the end of the year, we may have what we call intergroup. Sometimes we talk of intra-group balances, which could relate to intra-group indebtedness, meaning that the holding company may have sold some goods to the subsidiary. That's a transaction. But at the end of the year, subsidiary owes holding owes subsidiary. The intra-group transactions, which we say in the group accounts, that they are eliminated. Yes, of course, we talk of them being reconciled and eliminated in full from the books of accounts. Now, what's the concern of auditors? Most of these transactions involving related parties may fail to meet arm's length. Of a transaction. What's arm's length? We regard to a transaction having met the arm's length when we have an independent buyer and an independent seller, each one of them pursuing their own interests. Persons who prior to this transaction did not relate in any way. It's the way we move in town and you enter into a shop, you enter into a mall, supermarket, and you do some window shopping, you choose to buy, you pick an item, go pay for it. That's a transaction which meets the arm's length. Independent buyer, independent seller, who did not know each other or did not have any other relationship prior to this transaction, each one of them pursuing their personal interests. That's a transaction meeting the arm's length. But when you have related parties, you agree with me that by virtue of having relations with the person who we are transacting with, in most cases, the transactions will not meet the arm's length. A good example, it's very hot outside. You may meet a friend or a relative with a general shop. Then when you're visiting them, then they'll ask you, which soda do you take, cold or warm? Then they're giving you for free. So you can imagine if it's not their shop, they've just been employed to operate the shop on behalf of the owner. It means that this transaction is not meeting the arm's length. And maybe they'll not even pay for this. They may even proceed to conceal that such a transaction happened. It is failing to meet the arm's length. You'll find that in big companies, or when say some corporates are being involved, when a related party is involved, you find that product, items, assets are sold at an exaggerated price. Unakuta kwamba an entity wishes to acquire some furniture and fittings. An entity wishes to lease some space for their operations. When a related party is involved, you may find that the lease charges, the rent is highly exaggerated to benefit a related party. And that's why you'll find that in most of the entities, in their procurement guidelines, they restrict, yes, or basically they indicate that no one should transact with the entity. If you are a director, if you are an employee, you are not allowed to transact with the entity because it will amount to a related party transaction, which is likely not to meet the arm's length. So by itself, it is a fraud risk factor. It is a fraud risk factor or a fraud risk indicator. It is a fraud risk factor or a fraud risk indicator that when a related party is involved, high chances fraud may be executed. We saw what happened to one Chiroba. Yes, Chiroba here, it's a communications authority of Kenya. Yes, him being involved in some transactions. And this costed him his job because the prices at which he was availing the houses or something was highly exaggerated since he was a related party and had some interest in these transactions. So it is a fraud risk factor, plus the auditor is looking at the disclosure element. Disclosure element, it's so paramount. Involving a related party is not prohibited as long as there is full and proper disclosure of the same. Because we may end up following the due process in the procurement process. We invite tenders, we open the tenders, the vetting process takes place, but it happens that a person whom we are related in one way or another wins the tender. That the element of being related cannot be applied to disqualify them. What we say is therefore disclosure of any interest of the relationship. And that's why every other year, if you check through the Companies Act, the company law notes, there has to be review of any related party. Because today we may not be related, but tomorrow, because of some transactions or happenings, that we are related. So the management needs to put in place policies to ensure that this element of related parties is being reviewed now and then, and full disclosure being made in the financial statements, and full disclosure being made in the financial statements. So right after that, we look at the indicators of related parties. So as an auditor, what do we look for to identify any related parties? What do we look for to identify related parties? So I can say, according to IAS 24, according to IAS 24, comma, a related party is defined as an entity. A related party is defined as an entity. A related party is defined as an entity, Roman number 1, which directly or indirectly, through one or more subsidiaries, which directly or indirectly, through one or more subsidiaries, controls, comma, is controlled by, comma, has an interest in the entity, has an interest in the entity that gives it significant influence, has an interest in the entity that gives it significant influence, has an interest in the entity, that gives it significant influence, comma, has a joint control over the entity, has a joint control over the entity, has a joint control over the entity, or is under common control, 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 e.g., parent company, e.g., parent company, comma, subsidiaries, and sub-subsidiaries. Parent company, comma, subsidiaries and sub-subsidiaries. Subsidiaries and sub-subsidiaries. Perfect. Roman number 2. The parent is an associate. The parent is an associate of an entity. 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 Roman number 3. The parent is a joint venture. The parent is a joint venture. The parent is a joint venture in which the entity is a venturer. In which the entity is a venturer. The party is a joint venture in which the entity is a venturer. In which the entity is a venturer. Roman number 4. The party is a jointly controlled entity. 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 Is a jointly controlled entity. Or significantly influenced entity. The party is a jointly controlled entity or significantly influenced entity by another party, significantly influenced entity by another party with majority shareholders, by another party with majority shareholders, by another party with majority shareholders, And the last point, the party is a close member of a family. The party is a close member of a family. The party is a close member of a family of any individual, with interest in the entity. Close member of the family of any individual with interest in the entity. Of any individual with interest in the entity. So that's why we say that related parties will involve a family member or any component in the group structure. Any component in the group structure is a related party. Skip a line and say, according to ISA 550, according to ISA 550, according to ISA 550, according to ISA 550, comma, a person or other entity, a person or other entity, a person or other entity that has control, a person or other entity that has control or significant influence, a person or other entity that has control or significant influence as control or significant influence, directly or indirectly, directly or indirectly, directly or indirectly, over the entity, directly or indirectly, over the entity, is referred to as a related party. Directly or indirectly is referred to as a related party. Is referred to as a related party. Another paragraph says, related parties by virtue of their ability. Related parties by virtue of their ability. Related parties by virtue of their ability. Related parties by virtue of their ability may be in a position to exert. May be in a position to exert dominance, may be in a position to exert dominance or influence, may be in a position to exert dominance or influence over the entity, may be in a position to exert dominance or influence over the entity or its management over the entity or its management, which may result to other than, as may be in a position to exert dominance or influence over the entity or its management, which may result to other than arm's length transactions, which may result to other than arm's length transactions, which may result to other than arm's length transactions, which may result to other than arm's length transactions, may result to other than arm's length transactions. All right, let's define arm's length transactions. Subtopic, arm's length transactions. Arm's length transactions. Arm's length transactions. We've already defined them and said it is a transaction conducted. It is a transaction conducted on such terms and conditions. It is a transaction conducted on such terms and conditions. Transaction conducted on such terms and conditions as between a willing buyer. Yes, conducted on such terms and conditions as between a willing buyer and a willing seller, as between a willing buyer and a willing seller who are unrelated, unrelated, willing buyer and a willing seller who are unrelated, and acting independently of each other, acting independently of each other, and pursuing their own interests, and pursuing their own interests, and pursuing their own interests, and pursuing their own interests. So they are purely independent of each other, willing buyer, willing seller, each one of them pursuing their own interests. Subtopic. Auditors' interests and objectives. Auditors' interests and objectives on related parties. Auditors' interest and objectives on related parties. auditors' interests and objectives on related parties. On related parties. Number one. Auditors' interests and objectives on related parties. Number one, so those who are asking about the space is 1 page, written like 1 page. 1 page. All right, number one, to recognize fraud risk factors. To recognize fraud risk factors. To recognize fraud risk factors arising from related party transactions. To recognize fraud risk factors arising from related party transactions and relationships. To recognize fraud risk factors arising from related party transactions and relationships relevant to the identification and assessments relevant to the identification and assessment of the risk of material misstatement. Relevant to the identification and assessment of the risk of material misstatement. Assessment of the risk of material misstatement. I mentioned that fraud risk factors or fraud risk indicators, every time you have a related party, that alone is a fraud risk factor, because high chances the prices will be exaggerated or other indicators that will be listing down right after this subtopic. Number two, conclude whether the financial statements achieve fair presentation. Financial statements achieve fair presentation and disclosure. Conclude whether the financial statements achieve fair presentation and disclosure and are not misleading. And are not misleading. And are not misleading. And are not misleading. Perfect. Subtopic. Indicators of related party transactions. Indicators of related party transactions. Indicators of related party transactions. What's likely to tell you as an auditor, or what's the red flag? You're asking about what's the red flag on matters related to party. Number one, we may have transactions which have got unusual terms of trade. Unusual terms of trade. Unakuta kwamba very huge discounts have been given. Say we have a policy, if we are a lending institution, that we do ×3 of the savings. You find somebody has gotten like ×5 of the savings. Who is this person? Who is this person? Discounts are so huge. the repayment period. Say when we give some credit, repayment should be made within the next 21 days. 21 days. Somebody is paying within like 2, 3, 4 months. That's an indicator of a related party. There could be an element of a related party. We even talk of unrecorded. We may be meeting some unrecorded transactions. Yeah. International accounting standards, they run from number 1 up to number 41. Can you recall what is IAS number 41? It will represent agriculture. Perfect. Learned friends around. So agriculture, you find that in most cases, like even ourselves when we are at home and you're doing some agriculture in your family farm, nobody will pay you. Yes, the parents assisting the parents, assisting the guardians with very tough farm jobs. Nobody will pay you. So as an auditor, if you find that things are happening at the farm and no expense relating to that service offered has been captured, high chances these are related party. It is a related party. And that's why you find that IAS number 41 always recommends that even if you've not paid yourself as the farm owner, you record it as an expense, then in the B sheet, in the statement of financial position, you accrue it as a liability. As such, the financial statements will be complete. As such, the financial statements will be complete. So transactions with unusual terms of trade, transactions which are not being recorded, transactions which lacks logical business reason. There are some transactions which lacks logical business reason. Let me give you a very good example. That we acquire an asset, that's IAS number 16. We acquire an asset worth 4.7. Maybe it's even a motor vehicle, a high-end motor vehicle, which can be used even in rough roads and such. We are acquiring this in 1st January of 2024. Then somewhere on 2nd of March, the same year 2024, which is today, it's being disposed of. And it is disposed of at around 1.5 million. How can it even be explained? Yes, in ile ulitaka kampuni to incur only to sell it to a related party. Most likely a related party is involved here. A related party is involved here. Then you're selling it at 1.5. There is no like changing technology, which maybe it's declaring our asset obsolete, that we need to dispose it off for us to acquire the newest technology. So if such a transaction happens and it cannot be explained business-wise, high chances they are a related party. So even if you are reviewing some invoices, you know, when you perform some background research, it's a 310. When you perform some background research, you get right about the brackets within which the client operates. That their least purchases costs around 10,000 shillings. And the highest purchase, maybe it's costing around 1.7 million. So if you find invoices to the tune of 3.2, to the tune of 2.4, these are invoices with exceptional balances, with exceptional figures. Again, this could be the element of related parties. Actually, we mention them as the audit procedures. Audit procedures on related parties. Number one, we look at the management criteria used to identify and account for related parties. What's the criteria? What's the criteria of identifying related parties and accounting for them? Of course, accounting for them will require proper disclosure. Don't forget again, we look at the minutes. Minutes on the deliberations of the directors and the shareholders on matters related parties. We can even engage other auditors who have ever been engaged by the client. They can shed more light on any related parties. We can look at the other legal documentation, the articles of association, which manages or influences on the management of the corporate, whether there are any elements of related parties. Internal auditors report can shed light about any related parties. So any person who is knowledgeable, of the business, we can engage them to disclose related parties. And the last point, but not least, what are we always saying? Is a 580. Seek management representation letter. Seek management representation letter on any or on existence of related parties in the business. The last time this was tested at question number 1, it was worth 16 marks. 16 marks. Then it was question number 1. Yani ndio inakufanyia ushering kwa karatasi ya CASNEP, question number 1. They wanted you to discuss indicators of related parties, 8 marks, then audit procedures on related parties, 8 marks. Direct question, a direct question, a direct question. We look at it right after this. You see how it was framed. You see how it was framed. It was very direct, very direct. All right. Indicators of related party transactions. I can say, during the course of the audit, 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 comma, the auditors need to be alert. The auditors need to be alert for any transactions. The auditors need to be alert for any transactions which appear. Auditors need to be alert for any transactions which appear to be unusual, for any transactions which appear to be unusual in circumstances, appear to be unusual in circumstances, appear to be unusual in circumstances, and which may indicate the existence of related parties. Appear to be unusual in circumstances, and which may indicate the existence of related parties, and which may indicate the existence of related parties. Full stop. Another paragraph. Examples of such transactions include examples of such transactions include examples of such transactions includes, number 1, transactions with abnormal terms of trade. Transactions with abnormal terms of trade, e.g. unusual prices, e.g. unusual prices, comma, unusual discounts, unusual comma, unusual repayment terms, unusual repayment terms, comma, interest rates, etc., etc. Interest rates, etc. Interest rates, etc., etc. Number 2, transactions which lacks an apparent logical business reason. Transactions which lacks an apparent logical business reason. Transactions which lacks an apparent logical business reason for their occurrence. Transactions which lacks an apparent logical business reason for their occurrence. Number 3, unrecorded transactions. Unrecorded transactions and recorded transactions, such as provision of management services, such as provision of management services at no charge, such as provision of management services at no charge, provision of management services at no charge. Let's go to those other points under the audit procedures subtopic. Audit procedures on related party transactions and balances. 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 Yes, please. Yes. In case of? Yeah, they're indicators of fraud. Yes, these are the answers. These are the answers. These are the answers. These are under the financial indicators of fraud risk factors. Yes, because we have under the inherent risk, we talk of 4 main characteristics. That we may have management characteristics, we have the industry characteristics, we have the engagement characteristics, and the financial characteristics. Now, those examples we've given are under financial characteristics, which makes us to assess inherent risk as being very high. You are very correct to call them fraud risk factors. All these points we discuss here, under ISA number 240, they are fraud risk factors. They are fraud risk factors. In general, we define them as the indicators of fraud. Why do we look at indicators of fraud? Because unlike errors, which can easily be detected, frauds are always concealed. So you cannot find them at the face value of the financial statements, not unless you look for indicators. So complex transactions, that's a fraud risk factor, falling under the financial characteristics. Sometimes we call them transaction characteristics. So if you find them asking about transaction characteristics, they're referring to the financial characteristics. Fraud risk factors, or ways that we are assessing inherent risk as being high. Some of these are related party, they are purely related parties. Purely related parties. Thanks for that question. All right, so audit procedures on related party transactions and balances. Number one, review the entity's procedures, review the entity's procedures and controls, review the entity's procedures and controls, put in place, review the entity's procedures and controls, put in place to identify related party transactions, review the entity's procedures and controls, put in place to identify related party transactions and disclose them. Controls put in place to identify related party transactions and disclose them. If I mentioned that if you can recall your company law, this review has to be done on a yearly basis. As an auditor, you need to see it having done, identifying the related parties. Number two, review the minutes of the meetings. Review the minutes of the meetings of shareholders. Review the minutes of the meetings of shareholders and directors. Review the minutes of the meetings of shareholders and directors and other relevant statutory documents, meetings of shareholders and directors and other relevant statutory documents and other relevant statutory documents. If you are asked about statutory books of accounts, which ones do you give examples of? Statutory books of accounts. Companies Act. Companies Act. Is Memorandum of Association. The MA and AA, we refer to them as constitutive documents. We refer to them as constitutive documents. Then the others like the Companies Act, Insurance Act, Banking Act, these are acts. These are acts. The statutory books of accounts includes the shareholders register, directors register, register of charges. You heard of the register of charges? Register of charges. So shareholders, directors, register of charges. Register of debentures. Those are the statutory books. Those are the statutory books. Those are the statutory. The Company Act, I'm looking for a general word for them. The Companies Act, the Insurance Act, and these. I'm saying the acts. We can refer to them as the what should we call them as a group? What interpretation in a potea? Because the constitutive documents are the articles and memorandum of association. The statutory books are the ones we've listed down. They may be statutory, but not books. These are not books. But they can be referred to as statutory what? Because they are statutes. They're not books. Yes. Tutafuta jina yake. Tutaipata. All right. So in this case, the relevant statutory documents, e.g., directors register. E.g., directors register. So said, review the minutes of the meetings of shareholders and directors and other relevant statutory documents, e.g., directors register. Directors register. All right, number 3. Inspect bank and legal confirmations. Inspect bank and legal confirmations. Inspect bank and legal confirmations obtained as part of audit procedures. Inspect bank and legal confirmations obtain bank and legal confirmations obtained as part of audit procedures to confirm on related parties. To confirm on related parties. To confirm on related parties. Although nowadays it's a bit easy to trace the related parties. I don't know where people get this information from, but you find sometimes you can check who owns a certain motor vehicle just by using their number plate. How do people check this? I saw there's a celebrity who had a car on the road and people checked and they realized it's like he is partnering with a bank to acquire it. So meaning that he had not fully acquired it. The other day, we knew who are the owners of China Square. The ownership, the directors of a company are known through obtaining what, CR12 or CR who? Who is aware of CR which one? Our online family. Our online family. We want to know the directorship of a company. Yes, CR12. Moses is confirming this and Celine is confirming the same. Yes, CR12. That you can get it online. You can know the owners of a certain company. So if we suspect that there is an element of related party, then we can obtain the CR12. Yes, the same case, KK and Isaac, they're confirming it's CR12. Thanks for the input. We can know that who are the directors of this company who is selling furniture to this other company. So we can identify, unless they have engaged some proxies. You know, when proxies are involved, even if you find them, they look as if they're not related. Yes, but it is a control, it's an audit procedure. It's an audit procedure for us as auditors to check who could be the owners of such other companies which are dealing with the company. So inspect, yeah, that was a point that Maureen is confirming there. All right. Number 4. Inquire from management. We expect to get some information from the management. Inquire from management and others within the entity. Inquire from management and others within the entity. Inquire from management and others within the entity to obtain an understanding. To obtain an understanding. To obtain an understanding of the controls. To obtain an understanding of the controls that management has established. Obtain an understanding of the controls that management has established. That management has established to authorize and approve. Management has established to authorize and approve significant transactions. To authorize and approve significant transactions and arrangements. To authorize and approve significant transactions and arrangements with related parties. Authorize and approve significant transactions and arrangements with related parties. Significant transactions and arrangements with related parties. We need to have such procedures. I mentioned we could be having procurement procedures. Herein, we need policies on how to engage a related party if they happen to win the tender. Next. Inquire from other auditors. Inquire from other auditors currently involved in the audit of components. Inquire from other auditors currently involved in the audit of components. Currently involved in the audit of components on the knowledge about related parties. Inquire from other auditors currently involved in the audit of components on their knowledge about related parties. About related parties. If you can recall, when we are discussing criminal liability on the part of the auditor, we highlighted some around 9 points on instances where an auditor would be criminally charged. One of them was if a component auditor fails to avail evidence to the group engagement partner, whom we call as the principal auditor, that's a criminal offense. So these are component auditors, auditors who are auditing these other components of the group structure. They should be able to avail evidence to the GEP, group engagement partner, who reports on behalf of the group. Yeah, because we have the intra. We call them inter or intra-group. Intra-group, eh? Intra-group. The reason why sometimes I confuse the term is when you're discussing conflict, and we have different types of conflicts, we have intrapersonal conflict. Then we have interpersonal conflict. So intrapersonal is conflict within a person. Sometimes you have conflict within yourself. Yes. And one way that intrapersonal conflict is manifested is through interpersonal conflict. Yes. Those with intrapersonal conflicts ni wale wasee kwa matatu asubuhi utaingia waambie wakusongee, wakwambie ununue gari yako. Very early in the morning, yani wako tu na hasira ndani yake. Naambia kainde nisongee sababu amekalia kiti kubwa karibu yote, anakwambia ununue gari yako. ndani yao kuna ma intrapersonal conflict, so it's manifested through interpersonal conflict. Kwa ofisi unakuta kwamba they are they're involved in lots of chaos, disagreements, and so on. So intrapersonal is within. Interpersonal, so it's correct intra-group because it's within the group. It's within the group. Intrapersonal. Yes, Moses is emphasizing here that intra is within, inter is between. Inter is between. Perfect. So it's intra-group transaction. So we are saying that the component auditors can shed some light on related parties because even themselves within the group, they are transacting and they are related parties. Perfect. Next. Inquire from previous auditors. Inquire from previous auditors. Inquire from previous auditors who have ever been engaged. Inquire from previous auditors who have ever been engaged by the client. Inquire from previous auditors who have ever been engaged by the client about the existence of related parties. About existence of related parties. Inquire from previous auditors who have ever been engaged by the client about existence of related parties. Yeah, those are the previous auditors. Remember, we mentioned this as an exception to confidentiality, and we indicated it as a matter of professional courtesy that the incoming auditor can go ahead to meet the outgoing auditor. We discussed it under the 10 points. You can call the 10 points. Number one was practical legal review. Number two was obtaining references. Number three was meeting the previous auditors. Meeting the previous auditors. They can always shed a lot of light on any related parties. Number next. Inspect records and documents. Inspect records and documents. Inspect records and documents that may provide information. Inspect records and documents that may provide information about related party relationship. Inspect records and documents that may provide information about related party relationship and transactions. Inspect records and documents that may provide information about related party relationship and transactions. e.g., internal audit reports, internal audit reports, internal audit reports, specific invoices, specific invoices, specific invoices, and correspondences. Specific invoices and correspondences. Specific invoices and correspondences. I don't know whether you watched the Auditor General Kadungu Madam this week presenting her report. Yes, yeah, she was there in the news, was reporting to the budget committee or something. Yeah, he was able to report lots of such issues, exaggerated figures, embezzlements, related parties being involved. Yeah, this week. Next, examine the books. Examine the books. Day books. These are the books of original entity. Examine the books and journals. Examine the books and journals. Looking out for exceptional. Examine the books and journals. Looking out for exceptional and unusual transactions. Looking out for exceptional and unusual transactions. Looking out for exceptional and unusual transactions. Lastly, number 8, Request for management representation letter. Request for management representation letter concerning their disclosure. 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 Sababu tumesema disclosure is paramount. Disclosure is paramount. On that breath, skip around and have NB. NB. Have NB. NB. Write and say, if in the auditor's judgment, if in the auditor's judgment, if in the auditor's judgment, the related parties have not been fully disclosed, if in the auditor's judgment, the related parties have not been fully disclosed, if in the auditor's judgment, the related parties have not been fully disclosed or completely accounted for, have not been fully disclosed or completely accounted for, comma, the auditors should modify the audit report. The auditors should modify the audit report. The auditors should modify the audit report on the basis of disagreement. Modify the audit report on the basis of disagreements, and issue an appropriate audit opinion, audit opinion, and issue an appropriate audit opinion, and issue an appropriate audit opinion. Yes, when we talk of appropriate audit opinion, we know under disagreement we can do an adverse or a qualified opinion. Adverse or qualified opinion, depending on the materiality and pervasiveness of the disagreement, pervasiveness and materiality of the disagreement. Yes, I want to share a question with you. A question with you. Yes, I hope I'll be able to trace it. June 2012. June 2012, question number 1. June 2012, question number 1. And because you may look for it without tracing it, I've just screenshot it to save you a lot of time to look for it where it is. Isikosekane kama hiyo nimekosa. Ndio hiyo. Metuma. Otherwise, it is in those past papers that I've sent you. So usishangae wanasema ISA 555. That's a mistake. This is a typed paper. Kitambo colleges, we are typing these past papers so that they can own them. They are able to put their logo, they're able to put their, so that they become their items, they become their property. So according to ISA 550, related parties, for the financial reporting frameworks, establish specific accounting and disclosure requirements for related party relationships and balances to enable users of the financial statements to understand their nature. The auditor has a responsibility to perform audit procedures to identify, assess, and respond to the risks of material misstatements arising from the entity's failure to appropriately account for or disclose related party relationships, transactions, and balances. The auditor should therefore place emphasis on testing material transactions with parties he knows are related to the reporting entity. Certain relationships, such as parent-subsidiary or investor-investee, may be clearly evident. However, determining the existence of other related party relationships required the application of specific audit procedures. The auditor could also devise detailed procedures intended to provide guidance to identifying material transactions with parties known to be related and for identifying material transactions that may be indicative of the existence of previously undetermined relationships. Required. Design the specific audit procedures that could be relied upon to ascertain the existence of related parties, 8 marks. Describe detailed procedures an audit could perform to identify transactions with related parties, 8 marks. So that's the question I was telling you. It's right, question number 1. It's right. Question number 1. Audit procedures that could be relied upon to ascertain the existence of related parties. Detailed procedures an auditor could perform to identify transactions with related parties. Unajua swali inakaa kama ni the same. Yes, it looks like it's asking for the same thing. It looks like it's asking for the same thing. It's because points are almost similar. That I told you, the one I gave you around 3 or 4 points, I told you we can borrow points from the other. We can borrow points from the other. Let's try to distinguish them. Number 1, design specific audit procedures that could be relied upon to ascertain the existence of related party. That one we are looking at the existence of related party. While item number 2, procedures an auditor could perform to identify transactions with related parties. So it's like the first subtopic there we discussed about indicators of related parties. That's what Roman number 1 is asking. Number 2 is asking audit procedures on related party transactions and balances. So that's Roman 2. We have 9 answers that I've given you. The 9 answers relate to Roman number 2. Yes, this element of reviewing the entity's procedures and controls put in place to identify related party transactions and disclose. That's a point that you never miss. And of course, the last one, seek management representation rate. Then those others, the issues of checking the minutes, bank confirmations, and acquiring. There are some points that you need to make sure that you do not forget. These ones should come outright. You see, these are related parties. So we can get information from component auditors about related party. And the other one we've said, we can inquire from previously engaged auditors. So how many points are those already? I'm assisting those who will understand and those who will come. All of us. Number 1, we have gotten right about audit procedures management are putting in place to identify related parties. Number 2, we've talked of minutes. Number 3, we've talked of component auditors. Number 4, we've talked of other auditors previously engaged by the client. Number 5, which should be the last one, management representation letter. Those are points that you should not forget. Then let's see which other points we can put inside there. Yes, that you'll make sure that you'll not forget. Like inquiring from management themselves. right? That's another point that can come easily. So we are at number 6. We have inquired from the management. Then inspecting records and documents. Check your point number 7. Inspect records and documents that will provide information about related parties. Can we even forget about the books and journals? No. Examine the books and journals, looking out for exceptional and unusual transactions. Just like that, you have your 8 points. So which one have we skipped? Number 3. Inspect bank and legal confirmations obtained as part of audit procedures to confirm on related parties. I believe that way the way we have revised them. Who are component auditors? John Young, component auditors are the auditors of these components here. Holding company, subsidiary, sub-subsidiary, associate, investment, joint venture. In the eyes of all these are separate legal entities. They may engage their own auditors. So we could be having how many auditors? 1, 2, 3, 4, 5, 6, 7. All those are component auditors. In audit, sometimes we call these as joint audit. Because again, as much as we say that they are separate legal entities, with regard to ISA 600, this is one component, group audit. So it's one audit where we're engaging more than one auditor, hence joint audit. Because joint audit is when a client engages more than one auditor. Joint audit is where we engage more than one auditor. Yes. Now, the first requirement describes the specific procedures that could be relied upon. Now we capture this. Number 1, review for transactions with abnormal terms of trade. Check indicators of related parties. Indicators of related parties. Those are the answers. Transactions with abnormal terms of trade. Then you can give those examples. Reviewing transactions which lacks an apparent logical business reason. Number 3, reviewing unrecorded transactions, such as provisions of management services at no charge. Then we end up at number 8. That's a point that we can use to discuss existence of related parties. We are examining the books with exceptional transactions. We can even examine journals with unusual transactions. You see what I've done? Eh? I know you also do that in an exam to make sure that you have enough points. Yes, discussing, trying to generate points from a single point there. Yes, we can even check number 7. Those examples are given there. Internal audit reports specific invoices and correspondences. Review specific invoices and correspondences. That's a point that can be discussed up there. Reviewing specific invoices and correspondences. Reviewing specific invoices and correspondences, which may seem to have not to meet the arm's length. Sometimes you mention the element of arm's length. You mention the element of arm's length. I'm really not giving up on that practical question. I don't know why it's disappearing. Itapatikana saidi hatuhitaji. So we can agree that that day we'll find it because it's just one. We need to answer it. So how many points are those now? 5 or 6? Another 6, eh? Yeah. Again, we can inquire from the management. Inquire from the management. Inquire from the management. Management, they need to give accurate information. They need to give accurate information. Then, as always, seek management representation letter. So that we are saying those questions are closely related. Sometimes they will seem to be asking on the same thing. Sawa. Alright, that's how we handle that question. This other part B, environmental audit. Environmental audit. We will get to discuss this audit. I know we've not discussed it before. You've not met it in the lower levels. But I can just mention for you as a fast forward thing, so that when we get there, it will be very easy. It will be very easy for us. You know, environmental audit, as we call it, we are looking at the environmental issues. We are looking at environmental issues. And the very common question that features so many times, even last sitting but one, I believe last sitting but one, question number 1 or 5, they ask us, what's the financial implication? The question which is being tested on that other part B, citing suitable examples. Explain cases where financial statements might be materially affected by social and environmental issues. So we look at the financial impact. Financial impact with regards to environmental issues. Mojawapo ni ISA number 570. ISA 570 we discussed, what was it? Going concern. Watu wameiva hizi vitu. Yeah, going concern inakuja hapa. So ni environmental audit, lakini kuna financial implication ya going concern. How do we get here? Is an entity may be required, say by NEMA, to close down because they are degrading environment in one way or another. So it is an environmental aspect which has got a financial implication, because if you are required to close down, then it means that we are preparing our books on breakup basis. You remember we talked of the going concern, we prepare statement of financial position, breakup basis. When there is abandonment of going concern, we are preparing books of accounts on a breakup basis. That is a number 570, the going concern aspect. Number 2, element of impairment. Impairment IAS number 36. This is perfect. How have you managed to get right all this? Yes, yeah, it's true. IAS number 30, IAS number, is it that 6 to that 9? They are all on intangibles. That 6 is on impairment. Yes. How does impairment come in here? You know, impairment requires that we record assets at their most appropriate carrying amounts. Let's say you've got an asset, then government has banned the use of that asset. This asset had an estimated useful life of 5 years. Just after using it for 1 year and 2 months, because of the impact it has in the environment, the government has banned the use of that asset. Will you continue depreciating it? No. It has to be tested for impairment. Sababu, it may not even have value. Kuna siku serikali ilifunga simu za watu. I don't know whether you can recall this. Handsets, not lines, handsets. Can you recall? It's not a long time ago, maybe before COVID, or some years there before COVID. Yeah, some handsets were closed because they were not legit. I'm not sure that even those who write that they buy dead phones, they would buy those. It would mean that the phone does not have any value. It's no longer an asset because assets have value. So you need to test it for impairment. Then number 3 and number 4 relate to each other. We capture IAS number, that's 7. IAS number 7 discusses contingents. IAS number 7 is contingents. That contingents may be probable, contingents may be possible. We discussed these two. Number 3, we discuss probable. Number 4, we discuss possible. What do you mean by this? Check environmental matters. Because of degrading the environment, Okia Omutata and associates may take us to court that there is no pollution in where? Is it Upper Hill? Or kuna mahali watu walikuwa wanalalamika sababu ya bafu. Ni Kilimani. Where is it? Kitengera, although hapo pia Nairobi kuna mahali. Kilimani, eh? Yes, Kilimani. Because of that, the owners may be taken to court because of that nuisance. So when the case is ongoing, then it remains a contingent, the litigation remains a contingent, and especially if we get to the end of the financial period before the case is determined. So we assess contingents as either being probable, possible, or remote, but in this question we handle probable and possible. But if you're able to estimate the loss that you are likely to incur and the much you are likely to compensate the aggrieved person, we call those amounts remedial compensation fee. We are supposed to create provision for legal fees and remedial compensation fee if you can estimate with high levels of accuracy. You see, it's emanating from environmental matters. We've been taken to court, say, because of noise pollution, water pollution, air pollution, and such. And as at the end of the year, the case is yet to be determined. We have to record them in this year because of the prudence concept and the IFRS number 15 and IAS 18 on revenue recognition and expenses. So if we can estimate with high levels of accuracy, create a provision. If we cannot estimate with high levels of accuracy, then we capture this in the notes to the financial statements. That means that these contingents are possible. We record them in the notes to the financial statements. These are the points earning us the 4 marks that are following there. Kwa hiyo swali ya related party, that going concern may be affected. Sababu ya sometimes even because of non-adherence to environmental issues, impairment when the asset has been banned by the government, then contingents. There's another thing we mark as correct in the custom marking scheme. They call it vicarious liability. Vicarious liability. Then see the lawyers in the house. What was vicarious liability in law? What was vicarious liability in law? Vicarious liability. Ilikuwa kitu gani? Somebody can recall? Kama mtu alifanya masters ya law. Nilikwambia masters ya kitu ni kushikwa mara kadhaa. Hiyo ndio inaitwa masters. Na kwa umesoma mara ya kwanza ni diploma, mara ya pili ni degree, ya tatu ni masters. Vicarious liability, this is when one person commits a tort but another person is held liable altogether. One person, it happened with regard to, is it employee, servant who? Servant-who relationship. The right terms are disappearing. The servant-employee, servant-boss relationship. That a servant may commit a tort, but if it's committed within the employment. Servant master, who is this? Moses Otieno. Unakunywa soda gani Moses? Yes, servant master relationship. That's what I was looking for, and it was really disappearing. Yes, that if a servant commits a tort while still in the employment, then the master will be held liable for this. That's what you're saying. Now, in the law of property, what tunajua tunaitwa restrictive covenants. That if you buy a piece of land which has got some restrictive covenants, we know that there are some plots you buy and they can even dictate the design of the house you can construct. Have you seen that in Nairobi? Unakuta nyumba za hiyo ile zote zinafanana. It's controlled on how you can do it. Others, you can't do more than 3 stories or 4 sometimes. They restrict. That's what we call restrictive covenant. That if I bought this piece of land and I entered in such a contract, even if I disposed it to you, you, the new ownership, will be bound by this contract. You can never argue out that you are not privy to it. It binds you. It binds you. So one person commits a tort, but another person is held liable altogether. That's what we call vicarious liability. I always try to look at the financial implication because this is asking about financial implication because CASMID marks this correct. It marks this correct in the marking scheme. I believe it's the of how much you are going to compensate the aggrieved person. It's one person committing the tort, another being held liable. But again, this liability has got financial implication because it relates to compensating the aggrieved person. I always try to argue out in that manner. But one person commits a tort, another is held liable, and they find themselves yes. And so these are the answers. So tukifika kwa environmental audit, tutanipea hizi answers mbio tukienda. Yes, it's very short. It's very short, but very, very relevant. So if I trace that other question on related party, I'll share. Then we'll meet on Wednesday. Niandikie date here. This one second. So I'll find it and I'll share. Like the way I was almost starting to answer a question on risks. That's how we'll be doing it. When we have a few minutes to the end of the session, we handle a question. A few minutes to the end of the question, even if it's 10 minutes, 15 minutes, we'll be looking at a question ndio tuweze kusonga mbele as we move forward. The introduction. Yes. It doesn't. It doesn't. It's like the leadership question number 1, 40 marks. Do you know sometimes you answer all the questions without those 2 pages essay? Have you attempted? Yes. You find that there is that essay 1.5 page, but you are answering all those 40 marks questions without making reference to that case study. Maybe 8 marks only. All the others you can be able to answer. So what we're saying is a big question does not mean a very complex question. Sana sana utu tu maswali kidogo ndio tunakuwa na mambo. Si unajua hata utu tufupi vile tunakuwa na hasira. Yes. Watu wafupi ile hasira wanakuwa nayo. Akikwambia nitakugonga ashakugonga. Yes. So utu tu maswali kidogo never fear huge questions. In most cases it's just yes. Inakaa kini kama complicated, but after you leave the required, you have the answers. Yes. You have the answers. Yes, that's right, Mr. Moses. All right, let's stop at that for today. A question. Haijaisha. Topic number 5. What did we cover last class? We covered officer's report. Someone is telling me last class we covered officer's report. Going concern. Have you covered officer's report? Oh, this is another class. I think someone has already joined the yes, going concern. This is an intermediate student who has joined, almost getting us confused. Let me check. Let's check where we are. But I'm sure we are not yet through with topic number 5. So topic number 5, we are not yet through. So you see, we've done 5.4, remove the party. We've not done drafting management letter representation. We've not done that. We've not, group, I feel I need to mention something about it, although I can always do that later. So we are left with management letter. We are left with analytical review procedures. We are left with using the work of an expert. So management letter is very important. Analytical review is very, very, very important. Then 5.11, audit committee, again, is very, very important. This work of an expert, even if you checked all the past papers, it's never tested at this level. But we'll cover it later. We should not allow it to waste our time. We can cover it later. Like the way I sent, we did documentation on recorded, because there's no question on documentation here in all the past papers. So it's not so common. So the next time we should be able to cover management letter, analytical review, and the role of audit committee. E5.10, I will see it as misplaced. Yes, they've never tested. There's no illustration question, but I'll give you some notes on it. I'll share when we go through together. I'll show you how we go about it. So topic number 5, we can say we are left with 3 serious subtopics there. Then number 6 on PFI, very important. That one is even in our exams. Special audit assignment, social and environmental audit. It's what we just introduced here. The other one is on audit and computerized information systems. And the audit of public sector, they are combined together there. Again, we need to look at it. Although they are both not shared on computerized. But you see, we have emerging issues. Archiving, audit archiving, and cloud saving. The way we save information in cloud. I'll mention it there. So we are in the right trajectory. We are good. And especially when we are through with covering topic number 6, and then number 8 on auditor's report, we can tell CASNEB come to become. Itakuwa tayari. So Maureen is asking the topics covered. Hii round tumefuata hii syllabus vizuri sana. Topic 1 is covered, topic 2 is covered, topic 3 is covered, topic 4 is covered. We are doing topic number 5. But again, topic number 7 is covered on forensic. Yes, topic 7 is covered on forensic. So 1 to 4 covered. We are winding up on 5. And number 7 is covered. Number 7 is covered. Let's see the grace. Now may the grace for our Lord Jesus Christ and the love of God and the fellowship of the Holy Spirit with us now and forevermore. Amen. So blessed evening. Endelea kuiva. Thank you. Endelea kuiva hizo topics.